Hey, good morning, everyone. Corey Schrader, Black Creek Wealth. Hope everyone's doing well. Hope everyone had a great weekend. I just want to start off today's conversation with, man, what a trading week it was last week. I want to illustrate a little bit with you today on how I'm looking at the markets and overall how quite frustrating all this can be right now as we kind of go sideways. So I want to talk to you a little bit about the trades from last week and wanted to give you a little bit of what's going on this week. So the biggest thing is if you recall last week, I talked to you about being short the market. I am still definitely short the market based off of just the indicators and things that I'm seeing. But what I will tell you is we are in very much a washing machine of whipsaws. Okay. So the biggest thing that I will tell all of you right now is if you are trading is to take profits as they come. Don't overthink this. Is set your price targets, set your return requirements, and just move as the market moves. And here's what I mean by that. So when I told y'all last week, I had a short on the market. I started it back in April 20th of the S&P 500. That was actually right here. Okay, so it was at 411.21. Basically, the market has been somewhat sideways, right? But it's up a little bit. So it's roughly at about, let's just call it 412. So right now the market's up about less than a 0.25%, no dividends or anything that's been paid out. Okay. So over that time period, as I told you, I was short SPXS. Okay. So I got in at 1772, didn't get in at the high. So let me go back to this so I can show you. So where's it? Right, the 20th. So got in at the high, which of course not overly excited about. Got in at 17.73, but I just wanted to get in, right? So going through all these gyrations, but again, indicators are telling me, hey, it's time to buy in. Oversold, oversold, oversold. Time to get in. So I did. Got in on 420, and in May 4th, you can see where this started to cross over. And ultimately what happened is it was actually crossed over here, but when it sold, it actually opened up a little bit more. So I actually put in a trailing stop for 1838. So I knew I got this pop here, but I wanted to ultimately get out because I saw that this huge pop up, but then we were starting to lose some. Here, I'll zoom in. We got this huge pop here, but we were starting to lose some volume. Now, I could have easily tried to catch the top side here and just say, hey, you know what, trailing stop, if it drops 2%, I'm out. But I didn't want to get whipsawed out. So I set a stop for 1838. Well, the low of the day was at 1816. You can see it there. And the high was at 1862. So I basically was able to catch right around 1838. And again, it's because I saw this movement where that pop and we were starting to see it start to come down. So I just set a trailing stop, didn't think about it. Okay. What happened the next day? Well, Apple reported earnings and everyone all of a sudden said that the whole system is no longer broken. We had a jobs report that came out that actually was hotter than expected. And I guess we're just going to be happy with higher jobs, not leading to higher inflation. So more of that soft landing conversation came in. So at this time, I just shifted from 3 times the leverage to just 1 time negative on the S&P, just in case something happened. I just didn't like the way that it jumped up and then it fought really strongly back. So I went ahead and put in a safety net there. And sure enough, it worked. So I was able to capture 3.5, like 3.6% upside on that trade from April 20th to the 4th. And again, I switched it to SH at that time. When I did that, now SH, I bought in at 15.24, and now it is sitting at $15. So I'm actually down on that position about 1.6%. But let's focus on the whole picture here, right? So the S&P 500 versus the trade, S&P is really flat, if not, I mean, you can look at the market right now. It may be a little bit up, but it's less than 0.25% up. Whereas this position that I'm in net is up 2.03%. So right now, I'm basically beating the S&P 500 by about 1.5 to 1.75%. Okay, and you're like, yeah, whoop-de-doo. Well, here's the thing. I'm not trying to hit home runs. What I'm trying to do is I'm trying to create a sustainable income source on these positions. So I may not get the ultra highs. I may not get the 30% returns. My hope is when the trend kicks in, then we'll start to see those. But like what I'm doing with this position is I'm just trying to outpace the S&P 500 consistently on the upside and the downside as we go throughout the year. Because if I'm able to do that, it's just going to compound. So it's not about hitting those home runs. It's about hitting those singles and doubles to keep getting those runs in. Okay. It's a different mindset. I'm not saying don't have your lottery ticket where you're going to try to bet on, hey, is Caterpillar going to go to 300 tomorrow? And you buy an option to try to play that. Okay. That's a whole nother thing. What I'm trying to do is help you build a sustainable income source or a sustainable trading strategy so that you continue to outperform and make money when everyone else is trying to read the tea leaves and go sideways, right? And just buy and hold. That's not what we need to do with our trading money, okay? So that's on SPY. So I was pretty happy with that trade. Again, I'm still sitting on the short side of it. SH, I bought it right here at 15, right? Actually, I bought it here at 15. So, it is what it is. I'm going to continue to ride it out. I do have a trailing stop in. I believe it's right at 1485. Yeah, it's like 1488 actually. So 1488. So I'm going to ride it a little bit longer. I still think there's legs for it to go up. Now, if CPI comes out hotter than expected on Wednesday, I'm going to put it right back into SPXS. So again, if you do want more of that hands-on trading, reach out to me and I'll tell you what that looks like. Because I do charge a little bit more to give you those signals throughout the week. So definitely let me know about that. But I do believe we are going to see some more rockiness back and forth, and I'm just going to play these sideways movements. Okay. So what I would tell you on Qs, I'm watching this because this is just something that's been a little frustrating. Definitely saw a sell signal on the Qs, which would have me jump into SQQQ. You would have been able to get at 320. Yeah, would have rode. I really don't like to switch until it hits kind of this neutral area because but the momentum just fizzles out on you. So you really just play in this sideways bar. And you probably would have made some money through it, but you would have had to set up trailing stops in order to catch that. So what I'm watching for right now with the Qs is that this is something that is just continuing to hold on and hold on and hold on because, again, it's the top companies. It's Apple, it's Microsoft, it's Google, it's NVIDIA. It's things that everyone's running to for safety for whatever reason, but they are, okay? So just know that this might be a very tough trade going sideways because it's basically playing this sideways market right here. Okay. So if you are going to trade it, definitely do it from a swing trading perspective and watch your indicators. Again, it's been oversold. Now it's overbought. It's basically playing this tight range. But to me, there's really no clear signal. So I'm not wanting to play in that sandbox. Okay. Now let's talk about my friend oil. I talked to you guys about this last week. I said, be ready that it may have some downside, but be ready to purchase into it. So what I tell you right now is there's definitely a buy signal that's showing me here. I am waiting another day or two. Yeah, I could have caught this, tried to catch this, this drop and this punch up. But what I'm really looking for is if this sucker can break 25, and I think I was telling you guys about this before, is if it can break 25, I'm absolutely looking at it because then there's going to be momentum to the upside. I don't think it has the legs. I think it's being exhausting right now. So I would just tell you, just be aware. And if you are looking at it, you can look at options on this too, right? So let's say you said, you know what, Corey, you talked about 25. Maybe I go a month out and I'll just buy a 25. Well, you're going to pay 175 for it. But if it does punch through 25, it definitely has some legs. Okay. So what that would ultimately mean is if it gets to 25, you're talking about $80 oil again. I just don't see it right now. So you may want to play this range, but you can see there's clearly a lot of just movement and volatility. So it's showing me a buy signal right now, oversold. Time to see the momentum buy back up. You see the divergence come back in. Now we're back in buy mode, but it's well off of where it opened up this morning. So again, just something to look at there. And then I talked to you all about Caterpillar last week. Ultimately, I had somebody reach out to me. They're like, "Oh, you were looking at Caterpillar. Definitely had a rough little go." Again, it's still flashing one heck of a buy signal on this. I would just tell you it's definitely doing this airplane landing onto the 50-day moving average. So if you are going to jump into it, what I would tell you is just set a trailing stop at a right around probably 209. It looks like it's pretty much sitting there. So you could definitely look at that. Or if you want to keep it tighter, just put it right underneath at about 211. About 211. And then that way, if it does drop, and this is what I'm looking at right here. So you could put it right around 211. And if it does drop there, this is on the weekly. If it does drop below there, it's going to break the 50-day moving average, and it may try to get a little bit closer. And then I would think the next level would be right around 200. So you could definitely look at that. But it's definitely telling me it's almost into buy mode. And again, if inflation and those things come in a little bit better than expected, there's definitely going to be more support on this. When I'm looking at my spreads for the week, I'm looking at 393. So I'm about 4.5% off the price action right now. And it's just wanting to sit right at about 412. And it's probably going to just sit there until we get to earnings, or not earnings. Well, we do have earnings this week, but until we get to inflation. Then that's on Wednesday, and PPI is on Thursday. So those are things to look at. Again, if you're in NVIDIA, what I'd tell you is just sell some covered calls on this joker, because ultimately, I think the high was 340. So even if you look at covered calls on this, and you can do it on a weekly basis, and I'm going to do a little bit of an event on this, but you could easily sell a covered call. Let's say you want to keep it at $1. You want to make $100 per 100 shares you have. You could easily sell this thing at, let's look at what the short-term ceiling has been. I mean, you can get to 300, and 300 from where it's at right now, 300 divided by 285, that's a 5% move, okay? So if you get a 5% move, plus you're selling $1 on each 100 shares, I mean, that's a respectable move, and to be able to make some income off of that. And then if the shares get taken away, okay, maybe you reestablish basis, or maybe you just wait for this to come back down. Earnings are 2 weeks out, so it's still flashing a sell signal. However, as you can see here, it just wants to keep fighting higher and higher and higher. So there really hasn't been a lot of strong momentum, but it's clearly overbought. It is clearly flashing that it is time for that to start testing it going lower. So I would tell you this is probably a prime candidate to do a covered call strategy. And if you don't know how to do that, let me know, because you could definitely make some serious money on your positions while they just sit and hold. And I'll touch on that with SPX real quick. So you could, or SPY, you could definitely look to do, let's say, a weekly. You could absolutely look at a weekly covered call on SPY. Again, you could look at it at 417. If you did that from where it's at today, 417 to 412. Quick. You're talking about a 1.25% upside. And then again, you're getting basically $100 per 100 shares. Okay. So it's something that you could definitely take a look at. And then if the market basically stays flat, you're good. You're just going to take in that income. But if it goes up and your shares get taken away, again, there's significant resistance from what I've seen consistently. It's tested it twice now at 418. So you could look at 418, 419 just to stay far away from it and capture some income. But hope this was helpful. That's how I'm playing this week. If you have questions and you want a little bit more guidance, I'm trying to keep these not too long. But my belief, especially this week, is we're going to continue to see sideways, if not a little bit down, My hope is that inflation does show that it is again sticky, and that they're going to have to hold rates for longer. But this market is incredibly resilient, incredibly frustrating right now. So keep the calm, stay vigilant. Do not try to overly think this. Again, we're going sideways until something either shows that it's broken or that things are getting way better much faster than we expected. So we're going to go sideways this week. So let's just take it as it is and make some money. But again, thanks for tuning in. Have a blessed week. If you need anything, let me know. As always, Corey Schrader, Black Creek Wealth, and have a blessed day. Talk to you soon.